Hi everyone, welcome back to my channel again. As I promised in my previous video, I would be discussing today about the differences between mutual fund, hedge fund and the private equity funds. Let's get started. First, we will discuss about how the funds are structured, like where the money comes from. So as we have seen in the mutual fund, it's like a pool of money from the different investors. Okay, different investors give money here. Same, this I think this is the feature kind of which is very common in all the cases. Okay, like hedge funds, private equity also, it's the same. Different investors would invest here also. It pulls money from the different investors. Now only different can be the number of investors would be like more in case of mutual funds. Okay, there may be hundred thousands of people also investing into one particular fund, but in case of hedge funds and private equity, the number of investors would be less. Quickly moving on to the type of investors. Investors base, what kind of investors can invest into this kind of funds. So starting and talking about mutual funds. Mutual funds, the investor type can be any normal individual can invest. Okay, any normal individual who has, as we discussed, as good as 500 rupees in India, they can start investing. And in terms of US, if I'm talking about, it can be $50 to $100. If somebody is having that amount, they can invest. Okay, but in the case of hedge funds and the same with the like private equity funds, this would be only HNI clients. Okay, what do I mean by that is high net worth individuals. Okay, high net worth individual only can invest. They are also called as we discussed in previous video, they are also called as accredited investors. Accredited investors. So accredited investors are nothing but the who have like good income record, who have the like risk taking capacity, and who have some kind of qualifications, in some cases licenses and certifications. Okay, those people are considered as the accredited. Same in the case of private equity. So accredited investors are only eligible to invest into the hedge funds and the private equity funds. Okay, and investment amount, coming to the like next point, it is how much investment is required. We have just discussed here. It's a $500, 500 rupees in like Indian terms, and in terms of dollars it could be 550 to $100. Okay, here the amount required is very huge. Let's say example of like at least like in terms of Indian rupee, I have to tell that is not defined clearly that this is like minimum amount required, but the amount required is very huge. Like just say for our example sake, 5 lakh rupees in terms of Indian money, and in case of dollars, if I'm talking about, it can be around like around the same amount, or it can be like 1 million. Okay, same with the case of private equity funds. So in this case, if you are talking about hedge funds and the private equity funds are same. Okay, I hope I'm making sense here and you guys are able to connect the dots. Quickly moving on to the liquidity. So liquidity, what do I mean by liquidity is? Liquidity is nothing but how easily you can convert your shares or the units of mutual fund into the cash. How easily you can get your cash back. That's a point about that. So in case of mutual funds, the redemption process is, so liquidity is like how easily you convert your money back into your, get your money back into your pocket. So in terms of mutual fund, the redemption process is very easy. You can get your, you can place the redemption request, okay, with your broker. The redemption request with your broker or the whatever the account you are holding. So you can place it, and within one day you can get your money back. But in case of hedge funds and the private equity funds, it would be different. But in the case of hedge funds, you have like both the kinds of funds. Like some funds are like close-ended, some funds are open-ended funds. Okay, in case of like close-ended, there would be some lock-in period wherein you need to wait for that particular point of time, like 3 years usually, or some funds can be 1 year or so. So till then, the the fund would be like not liquid for the investors to get their money back. But if your hedge fund is open ended, then in that case you can sell that into the open market and you can get your money back. Okay, so that's about the hedge funds. Okay, so it's mostly depends on the what kind of fund you are investing into, open ended or close ended. So liquidity is defined in hedge funds based on the open ended or the close ended. In case of private equity, most of the private equity funds are closed ended funds. Okay, what do I mean by that? It means there is a lock-in period in place, like 3 years. Up to 3 years you can't take money, you can't get your money back. So if we are talking about liquidity, then in that case private equity funds are illiquid. They are not so liquid. If you want to get your money back, you have to do a lot of things. You need to talk to the GP, you need to get another investors, you might get your money back, which is like very less when compared to what you have actually invested. So basically it's like kind of rules and regulations you need to follow, and the amount you are getting back may not be the same as what you have actually invested. Risk profile, understanding which one is risky. Let's understand that. So mutual funds, comparatively, they invest into like open market equities or the kind of like bonds or debentures, which makes them like low risky. So in terms of risk, if you are talking, mutual funds are not very risky compared to the hedge funds. Hedge funds are, if you ask me, hedge funds are like more riskier or the very high risk. The reason being they invest into usually it is said, right, hedge fund invest anywhere and everywhere. Wherever they see the profits, they will go and make the investment. So basically they invest into derivatives and currency swaps kind of things. Open market, they do arbitrage. Okay, and they do short selling. So these are all risky options what we are discussing now, which makes hedge funds very risky. Coming to the like private equity funds are also like high risk, but they can be considered to be like a medium risk. Okay, why? Because they don't invest into like open market. They very rarely they invest into like risky securities like derivatives, swaps and all. But most of the private equity companies or the funds invest into private companies. There would be risk involved. So I would say this the category for private equity funds in terms of risk, if you are talking, it's both can be, most of the funds can be considered or put in the bracket of medium, and some there can be some instances where the funds are investing into derivatives or the open market doing short selling. In that case it would be high risk also. Regulations, as we discussed in the previous video, uh, the funds and the stocks are or the securities are regulated by SEBI in India and SEC in US market. So they make all the regulations about the securities and this kind of funds. Okay, talking about like how mutual funds are regulated. So mutual funds are very highly regulated. Mutual funds are highly regulated. What do I mean by that? Is in terms of like they have to publish a lot of reports annually, monthly, quarterly also. There would be financial. They need to publish. They need to publish financials into like local newspaper, national newspaper. They need to broadcast into the like television on any business channels. They need to do a lot of stuff in terms of reporting. So if you're talking about regulation perspective, mutual funds are very highly regulated. Talking about hedge funds and the private equity, both are very less regulated. They are very less regulated. They are transparent to their own LPs or the own investors, but they are not open to the public. Okay, for regulators they have to publish the books, they have to put the records, everything for the regulators and the government and the investors or the stakeholders for that matter. But for the public they are not required to publish any their reports into the open market. They don't have to do that. Okay, so that makes them like a hedge funds and private equity fund less regulated. Okay. One more concept like management fee, management, like who would manage that? Okay. So who manages that? This management about like who manages basically is the question now, or the point here is. So talking about like mutual funds, hedge funds, private equity funds, in all the cases, these are managed by. Let me write this first. So these are managed by some professionals or the portfolio manager. They are called portfolio managers or fund managers. Okay, so all the cases it's same answer, like these are managed by portfolio managers or fund managers. In case of private equity, they are called GP, general partners. Who are those? So it can be one person who is taking all the decision, and he is called the fund manager. And in other cases, it can be group of people. Okay, with the bigger the size of the fund house, they have like made some kind of groups where the experts sit in, and they make them one entity, and they will like consolidate, or they together take all the decisions. Okay, who are those people? They are very qualified, very experienced. They have a lot of licenses and certifications. They have a lot of name and the fame into the market. In many cases, when the fund house releases the new funds, right? So people looking at, they first thing they look at the, like, who is a fund manager, and based on that fund manager experience and the name into the market, they will, a lot of people would get attracted and make the investments. Okay, this is about all the I have in today's video, where I have tried to summarize the differences between mutual fund, hedge fund, and the private equity fund. If you think I have missed some, then do comment any topic you want me to cover in this area, or any point you want to discuss or want to understand some of the differences which are like not covered in this video. Then put it in the comment section. I will take it from there. Thank you so much again, and happy learning, and see you in the next video. Thank you.